Good evening, ladies and gentlemen, Board of Directors. My name is Nicholas Tan, and I am the Senior Auditor of Sing Limited Liability Partnership. Starting from my right, these are my team members. First, we have Yendo, the Senior Manager. Next, we have Zoan and Richard, who are both the junior auditors. And finally, we have Eunice, who is our audit partner. We will now discuss the findings of Cosmopolitan Private Limited as of year-end 2013.
Hi, I'm Eunice. I am the audit partner of Sing Audit LLP. Now I'm going to talk about the auditor's responsibility. We have the responsibility to plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement, whether it is caused by error or fraud. Because of the nature of the audit evidence and the characteristic of the fraud, the auditor is able to obtain reasonable but not absolute assurance that the material misstatements are detected. Materiality of an audit opinion is determined by the impacts of uncorrected net misstatements. If the effects are below 10%, the type of audit opinions are modified. If it's above 10%, the opinion is qualified. Finally, if it's above 30%, the opinion at large would be adverse.
Good evening, my name is Nicholas Tan. I am the Senior Auditor and I'll be discussing the planned scope and timing regarding our audit. In our planned scope, we have highlighted several high-risk accounts. They are the inventory, accounts receivable, depreciation expense, sales, cost of goods sold, salary and wages, machinery and equipment, doubtful debt expenses, account payable, cash at bank, and long-term borrowing. Inventory increased by 22.72% or $1,706,000 since last year. Because the increase is significant, we have come to the conclusion that a business reason is inventory sold increase. An error could have been fictitious sales. Accounts receivable increased by 89.79% or $111,000 since last year. Because the increase is significant, we have come to the conclusion that the business reason is sales increase. An error could have been fictitious customers. Sales increased by 11.9% or $4,100,77 since last year, $410,000. This is increase in significant, and we have come to the conclusion that a business reason is an increase in quantity of goods sold increase. An error could have been fictitious sales. Depreciation expense increased by 18.54% or $119,000 since last year. The increase is small. We have come to the conclusion that a business reason is the change in depreciation method, an error that could have been a mathematical error. Cost of goods sold increased by 16.22% or $230,000 since last year. The increase is significant. We have come to the conclusion that a business reason is increase in purchases, an error that could have been understating closing stock. Salaries and wages was increased by 4.86% or $68,980 since last year. The increase is small. We have come to the conclusion that a business reason in the increase is salary bonus. An error could have been mathematical error. Machinery and equipment increased by 36.28% or $196,200. The increase is significant. We have come to the conclusion that a business reason is an increase in the purchase of machinery. An error could have been mathematical error. Doubtful debt expense decreased by 12.85% or $1,275. The increase is small, and we have come to the conclusion that a business reason is the doubtful debt has been overwritten. An error could have been obsolete debt, which may not have been taken into consideration. Accounts payable decreased by 20.78% or $46,371. The increase is small, and we have come to the conclusion that a business reason is that the debt had been paid off. An error could have been that there were no unrecorded liabilities. Cash increased by 23.94% or $81,236. The increase is significant. We have come to the conclusion that a business reason that there had been an increase in long-term borrowing, thereby increasing cash flow. An error could have been uncredited checks. Borrowing long-term increases by 100% or $150,000. The increase is significant. We have come to the conclusion that a business reason that it was chosen as a cheaper alternative compared to short-term loans. An error could have been fictitious borrowing. After detailing all these errors, we had used 2 months to reconcile and perform substantive or reliance tests. The weakness discovered will be discussed by Zoan and Yichen, while Yendo will be touching on adjusting entries, and Eunice, the audit opinion.
Good evening, ladies and gentlemen. As mentioned, we'll be discussing the internal control weakness for both accounts receivable and accounts payable. We found weakness in segregation of functions, authorization, processing, and output controls. We found that checks are not mailed directly by the person signing the checks but rather by the preparers. We also found out that accountants who maintain and prepare various accounting documents reports to the financial controller, who oversees the overall information procedures and approve journal entries. We found out that some invoices are not run directly through cash disbursement before recording in the voucher register. We found that vendors' invoices are only occasionally checked for proper pricing, extension, costing, and terms. Unmatched invoices, receiving reports, and purchase orders are not reviewed periodically. Vendors' monthly statements are also not reconciled to accounts payable subsidiary ledger. Some invoices are only checked occasionally for proper pricing, extension, costing, and terms. This may result in possible misstatements such that there may be understatements of accounts payable, or some of the invoices may be omitted. We recommend that vendors' invoices need to be checked regularly for proper pricing, extension, costing, and terms. We also noticed that the vendors' monthly statements are not reconciled to accounts payable subsidiary ledger. If the accounts payable subsidiary ledger are not reconciled, some of the vendor statements may not be properly recorded in the ledger, and there may be incompleteness in accounts payable, and accounts payable may be understated. So therefore, vendors' monthly statements must be reconciled to the accounts payable subsidiary ledger. The accounts payable clerk can be the one who will take charge in the reconciliation of the vendors' monthly statements with the accounts payable subsidiary ledger. We also noted during our audit that unmatched invoices, receiving reports, and purchase orders are not reviewed periodically. If they are not reviewed periodically, there may be possible errors which may not be accounted for, errors which will include understatements of accounts payable, and there may be accounts that are not accounted for, which will affect your financial statements, which should be reviewed by people who are interested in your company, such as for future investors or your shareholders you have now. Therefore, we recommend that policies can be implemented to ensure the reconciliation of accounts.
We have found several weaknesses in the segregation of function, access to assets, authorization, and processing control. The first weakness that we have noted in our audit is that the customer subsidiary ledgers are maintained by the accountant that handles the customer's check. This might result in a possible misstatement whereby the accountant could collude with the customer in order to gain a secret profit. Thus, we recommend that the job of maintaining the customer subsidiary ledger should be a separate job from the job of handling the customer's check. For the second weakness, during our audit, we noted that the customers are invoiced by an accountant who maintains the sales ledger. This might result in a possible misstatements whereby the accountant could understate the invoice amount and overstate the sales. This will allow them to gain a secret profit and, due to higher sales, a better performance benefit. Thus, we recommend the job of invoicing the customers should be separated from the job of recording sales in the sales ledger. For the third weakness, during our audit, we found that the sales invoice are not checked to prices and mechanical accuracy. This may result in possible misstatements whereby the sales are recorded but yet overstated or understated from actual sales amount. We recommend that the sales should be checked to prices and of mechanical accuracy.
Hello, I'm Yendo, the Audit Manager, and I'll be discussing our findings of your company. Since we did not rely on any of the controls, we had used substantive testing. We have found minor errors in both the accounts receivable and accounts payable. In accounts receivable, your customer Kame and JR Fragrances are experiencing financial difficulties, and there is an uncertainty whether both companies are able to pay off the amount that is owed. So we recommend that the allowance for doubtful debt should be increased by 1,750. According to Aroma Cosmetic Private Limited, it was stated in the confirmation letter that of 43,100 owed, they had already paid 36,000, which was received before the year end as per cash received journal. As such, this amount should have been credited in accounts receivable for financial year end 2013. Secondly, I will be moving on to the unrecorded liabilities in the accounts payable. We have found that the company have in total of 6 unrecorded liabilities from other companies such as Singapore Power, Fragrance Perfume Co., on-time freight, and A to Z cleaning services. For example, one major error was that there is an understatement of 11,952 from the inventory account for Fragrance Company. This amount should be recorded as current year liability due to the FOB Paris, which was incurred on both 30th and 31st December 2013. In total, I conclude that there is an unrecorded amount of 14,397 for the accounts payable.
Since the net proposed adjustment is 1.34% of the base of the material, $312,361, the impact of the proposed adjustment of the financial statement is not material. Thus, I conclude that the audit opinion of Cosmopolitan Private Limited of 2013 to be unmodified.